Hello, everyone. You're probably wondering why the interest rates are still so high, even the inflation is a bit under control. Obviously, there is a reason about this, and let's look at some numbers. For the past 50 years, the 30-year mortgage rates has moved in unison with the 10-year Treasury, as the average spread is about 1.72. 30-year fixed mortgage rate and 10-year spread right now in 2023 for the last year has been really big. If you can look at it now, the 10-year Treasury yield is 3.23, so that's why the rates is at the 6.95. The only time the spread approach or exceed 300 basis points was during the period of high inflation or economic volatility, like you can see in the 1980s and also 2008, 2009. You can see these numbers. This is the spread between 10-year Treasury and the 30-year mortgage. This is 2023. So if it's reasonable to assume that the spread and therefore mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provide investors with more certainty. However, it's unlikely that the spread will ever go back to the historical average of 170 basis points. And some risks are here. So you can see that the average is 1.72, then our rates will be at the 5.375. However, we are at the 3.2 now, so that's why the rates is at the 6.85. That's why it's so high. Now, June is National Home Ownership Month. And National Home Ownership Month, people are still buying homes, and there is financial benefits. As you can see, buying homes, you're building equity, and you have long-term savings and building wealth. Strong credit history, and instead of paying the rent to the landlord, you basically are paying to the mortgage, and every time you pay to the mortgage, you pay down to the principal. That the principal actually, basically is the savings, in terms of building long-term wealth. Social benefits of home ownership is you can see the health benefits and the property improvements, civic participation. People working from home these days and provide a privacy as well. Tax benefits, obviously interest write-off and property tax deduction. Obviously, you can see that if the home prices appreciate, which has been, and then you take the profit and you can go buy another house, bigger house, better, put it into down payment, or maybe you can invest in something else. So the home ownership remains as still the #1 feature of American dream. It's 74% people wanting to own a home, and it's really on top of able to retire, successful career, college degree, as you can see. And 78% of the people that they still wanted to buy a home, and especially the millennial and the Gen Z, 68% they wanted to invest in real estate, start a financial decision, and 43% wanting to buy rental homes, and as you can see. American opinion of best long-term investment, 34% still think that real estate is the best way to invest and accumulate wealth, and then gold and bonds, etc. However, the confidence of owning a home prices weakened towards the end of 2022. The reason is because obviously we all know that with the inflation, the interest rates, as these are the numbers historically, you can see 2022, the red one is the weakened, thoughts about owning a home. It is getting better. April number is much better. Home prices, the median prices, let's look at what happened. The median prices are really, doesn't mean it's the best way to indicate the home prices based on the social media or maybe the people who's talking about it. The reason is because the median prices, the middle prices, the home sold, and then the home sold for high price or home sold for less price depend on half of a higher, half of a lower. So that's the median price. But median price is the simple way to explain is like you have 3 coins in your pocket, line them up in ascending value. If you have 1 nickel and 2 dimes in your pocket, the median price is dime. If you have 2 nickels and 1 dime in your pocket, and then the median price is obviously nickel. So let's look at today's market. Average look at the home prices movement. In fact, there are more like less expensive homes are being sold in the market. So the prices has been stabilized. These green numbers look at the appreciation of the home in the past year until June, and then the price drop, and then now you can see the price goes up. This is from Case Shiller. FHFA also shows numbers. Of course, they collect different data to analyze these numbers. CoreLogic shows the numbers, and as you can see, February, March, it's going up. So all the patterns of home prices is pretty much the same by these three companies. Zillow shows the same way, and then Fannie Mae price stabilizing also shows the same way. So what are the unicorn years? So we talk about the second quarter of 2020 to the second quarter of 2022, that 2 years we call the unicorn years. And for the past 200 years, selling real estate is like riding a horse, okay? But 2020 and 2021, you can see the numbers. This is home appreciation. It jumped quite a bit. But 2022, the price appreciation come down, and it's comparable to the pre-pandemic years. And the pending listings, pre-unicorn years, you can see the listings. These are the listings, and then obviously 2021, 2022, there are a lot of listings, and then 2023, that this is the pending listings go back to the same like before. Showing traffic, people actually are buying more in 2021, 2022, but 2023 compared with 2020 and 2019, the numbers are still very high. And median days on the market, 2020 was 68 days because when the pandemic started, then people started to buy crazily and then it go down. But 2023 now is average of 43 days compared with prior pandemic. Actually, the median days on the market is lower. Home for sale, pre-unicorn years, these are the home for sale. Obviously, these are the numbers that home for sales during those 2 years, and now these are the numbers that home for sales in 2023. And that's still very low. So that's why we have low inventory. In the month inventory, we had about average of 4 months. Prior to pandemic, it's only 2 months during the 2021, 2022. But right now, if you look at it, we still have 2.9. That's why the inventory is still very low. Let's look at the foreclosures. The foreclosures obviously was every year, every place there's foreclosure, people lose job, and then they get sick, and income is not there. 2020, 2021 is low because during the time, the banks do not allow foreclosures and put everything on hold. So 2022, this is the numbers of foreclosures, but compared with prior years, and it's still very low. So I hope all these numbers can help you to make a decision about your next purchase of a real estate. And if you want to buy primary or, investment, I'm here to help. My number is 702-528-6799. Thank you for watching.